And we're recording. What is this? This is Multifamily Masters Live. What is Multifamily Masters Live? Myself, my two business partners, our entire team. My name is Garrison Gilbert. My business partners, Feras Moussa, Powell Chee, Bethany Smith, Kyle Mitchell, Chris Collins, Leonie Tran, and a few other people. We put together Multifamily Masters because we want to help you buy apartment buildings. We want to spread the knowledge, tons of free content, a very diverse group of people that come from all different angles. Some of us came through corporate America. Some people, such as myself, have done nothing but real estate since college. And we all came together and formed multifamilymasters.com. We have 70 plus meetups across the globe. Fantastic. We are a meetup organization. We have a mastermind. If you're looking to learn, share, network, and grow this business, if you're looking to have a team of people who are doing it, been there, done that, and doing it every day, looking over your shoulder, holding you accountable, reach out to one of us. If you are not a member of our Facebook group, hop on Facebook, multifamilymasters.com, check it out. We do this every 2 weeks. Typically, we have a guest speaker come on, kick as much knowledge. Let me hit admit all. We have people waiting in the waiting room. Forget exactly where I was, but we do this every 2 weeks. Normally we have a guest speaker come on here and just kick as much knowledge as possible. Tonight, we're going to do something a little bit different. My two business partners, Feras Moussa, Powell Chee, and myself, we own, manage, and control 3,000 plus apartments. We have come collectively probably 30, 35 years worth of real estate experience. We know this business inside and out. I hope you can stump us, because tonight we're going to do a Q&A. And just like everyone else in this business, we don't know the answer. We know where to find the answer. We have awesome people around us. We're members of some of the biggest mastermind groups in the country. We met each other speaking on a very large stage in front of 700 plus people several times, and we just became good friends, and we decided, why not? Let's grow something big, and here we are. If you catch this recording halfway through, if you catch this thing on Facebook tomorrow, the next day, and you want to catch it from the beginning, check out our YouTube channel, multifamilymasters.com, and that's all I got. A little bit about me: 20 years of experience, real estate, 1,200 plus properties, currently into 600 plus apartments. Powell, Feras, feel free to take it away, my man.
Awesome. Thanks, Garrison. That's great. Hey, for me, my name is Powell Chee. Live in Los Angeles, and let's see, real estate investor, entrepreneur. I like to say entrepreneur, but I still do have my day job. So I have several different side hustles and things like that, but still do have my day job, do all my investing around my day job. Began investing multifamily in 2017, bought a 40 unit building in Indianapolis, still have that property. And that was my first one. Since then, I JV'd on another one and then syndicated in 5 other deals. So I've been in, I think, in 7 total deals as a general partner, as an owner in multifamily. And I don't know, I would say that most recently, my exciting news is that I got another deal under contract right now and just did the due diligence for it. It's not a multifamily, it's a self-storage facility. So a little different asset class, some similarities and things like that, but yeah, working on that right now and trying to get that one closed. So, but yeah, go ahead, Feras.
All right, thanks, Powell. So hello, everyone. So for those of you that don't know me, my name is Feras Moussa. I have a company called Disrupt Equity. And basically we are a company that buys, multifamily assets, usually CB kind of space. And we have properties throughout Texas and Georgia. Currently, we're about 1,500 units. We've had 3 deals go full cycle as well. And we are vertically integrated. We have Disrupt Management, our in-house management company that also does third-party management. That has about 2,000 units under management as well. So definitely love multifamily, know all aspects of it, and we're looking to continue to buy, continue to grow across the board. So with that said, as Powell and Garrison kind of lit up, right, we are here for you all, right? Networking is a really important part of this whole industry, as well as just getting educated. And I think there's a lot of education that happens, right? But it might not be pretty applicable to you, right? There may be someone that's talking about debt, and maybe you have a specific question about debt, right? And so we figured, rather than bringing on kind of someone to, teach and educate, we decided, you know what, let's just go ahead and just do an open Q&A. So to me, the Q&As are fun, right? They get me thinking. I kind of start to learn how other people think, and always happy to try to add value. So I think that's kind of why me, Garrison, and Powell are here, and we are happy to help answer questions. So if people have questions, go ahead and ask them in the chat, and I'll go ahead and maybe moderate and ask them. And hey, Frank Cristiani, long time no see, man. Just looking at the audience.
Hey, what's going on, Feras? How are you?
Good.
So yeah, like
So
you
two
guys, like
questions.
this is kind of like an open thing right here. So feel free to ask your questions. Right now, we just kind of left this really open. So
And if people want to ask a question that they're nervous to ask in front of everyone, you can send it to me directly, privately, and I won't say who asked it. All right.
Okay, I have a question, guys.
All right, Trina, you're up. Go for it.
From Long Beach. So I have a question. Someone who doesn't have that much funds. I'm an engineer by background, and I'm okay with numbers, but I don't have any practical experience with underwriting deals. How would I be attractive to somebody who's done this before? How can I get practice with underwriting?
So, okay, I heard two different questions in there. Let me just reframe it and you tell me which one you really were asking. One of the questions I heard was, how can I be attractive to someone? How can I help add value to a partnership? The other question is, how can I learn to underwrite? And I guess which one of those two were you wondering?
Both.
Both? All right. Powell, Garrison, you guys want to answer one of them? I'm happy to answer one or both. So
yeah, let me take the sort of the value one, just because I answered this question just about a day ago. Well, for me, okay, this is just kind of where I'm coming from, Trina. When you're looking at multifamily, it is a team sport. So there is a lot of different roles that you can take in it. And the three major roles are really the acquisition side. So really there's going to be somebody who's got to find the deal, right? There's got to be somebody who finds the deal, underwrites the deal, does the due diligence, puts it under contract, has some earnest money to put down, things like that. There's somebody that has to do that, or a team of people need to do that, right? There's somebody that needs to do the second part, which is the capital, right? And bringing the money to do the deal, right? So either you have money or you can raise capital, or your network is you have a network of people that you can raise capital from. And the third part is the operations. Is really somebody needs to be the decision maker. Who's going to decide of who's good at budgeting, project management, and who's going to be on this deal for 5 to 7, however long, however many years you own this deal for, right? Maybe 10, maybe longer. And somebody has to make those decisions and be able to be good at that, right? And because they're going to be the ones that everybody's counting on to make the returns. So you want to add value in one of those three areas. Acquisitions, there are certain parts of the acquisition side that you can add value in. The second part is the capital side. If you can raise money, that's going to be important. And the third part is really on the operations side. Now, I'll tell you, if it's me and where I see most of the people come in at is either the front two. So either the acquisition side, either you're good at finding deals or helping somebody get a deal under contract, or secondly, you can provide you have a network where you can raise capital. Really, to me, the third side is a little bit more selective, and there's not as many openings really for that position. If you just say, really, I'm good at project management and construction and things like that, I would tell you honestly, in my experience, there's just not as many opportunities for that one.
Yeah, and it's ultimately about adding value, right? So to recap all the different roles in any partnership, right? There is sourcing the deal, there is putting the deal together, there is raising equity, there is providing the balance sheet, there is helping get to closing, whether it's hard money and some of those mechanics. Then there is kind of the operation side, right? It's asset management, there could be construction management, and kind of helping shepherd that. So those are probably the main roles that we typically see people get involved in. And then maybe to answer the other question, right, which is how to get good underwriting, right? My feedback to you all is, go understand the basics and go put together your own spreadsheet. I did that many, many years ago, so you can truly understand how all the numbers play together, right? From that, then you can start to understand how different things impact different things. And honestly, it's an experience thing. There's a lot of sheets out there, and there's a lot of ways to get educated. I think we've done one presentation on underwriting, and then we have investoracademy.net that we launched as well. People kind of go through and understand what that looks like. But it's none of it is hard, but it's just a lot of math and numbers kind of go together and understanding what risk there is and what's not. And so, my feedback is go try it a little bit, then ask us the specific questions. Hey, whenever you underwrite X, Y, and Z happens, how do you think about that, right? That's the really interesting meat. But first, you got to just know the basics. All right, let's keep going then. Let's see. Next
Hey, Feras, this is Jake Patel. I have a follow-up question on the second part of that. You guys mentioned about the raising fund. My question is, I'm looking into becoming KP in one of the deal key principal. What are the advantages and risks in becoming a KP?
Yeah, so for those that don't know, being a KP means key principal. What it really means is basically probably, Jengus, in your situation, you might be helping with the balance sheet, right? And you're basically getting what we call the Fannie card or Freddie card. And so long story short, a lot of people want to get a Fannie Freddie card. So whenever you go do a Fannie Freddie loan, whenever they ask, have you done a deal before? You can say yes, right? And, that's great. It's good to get involved in a deal. But I think one thing people gloss over is you are attaching yourself to that deal. Don't go be a KP on a deal that you don't think is going to perform, right? Because guess what? If that deal doesn't work out, if it ever defaults, it ever fails, you're going to have to say, yes, I have defaulted, or I've had a deal go bankrupt, but you're never going to be able to do a Fannie Freddie deal again. And I know I say never, maybe never is never, but my point is it's a bad mark. So the risk is ultimately that deal doesn't perform and it sours your track record, right? That's the big risk.
Okay, so is that mean that I should ask for JP shares for the team?
I mean, that's all a negotiation, right?
Okay.
So some people, can carry the deal themselves. And I'll give you an example. If I had a deal that I can close entirely myself, right? Why would I bring someone in to be a KP and give them GP? I lose something for nothing, right? Arguably. And so, it's more, a lot of times we'll bring people in as a favor, maybe for free, quote unquote, but if we're giving up something, then it has to add value ultimately, right? So, yeah. All right, let's keep going then. So one question from Anthony: what are your thoughts of investing in tertiary markets, 40,000 population? I guess I'll answer that one because we've had deals in Beaumont, Texas, about an hour east of Houston. We like tertiary markets, right? There's some downsides to the tertiary markets. Namely, you have fewer vendor pools, fewer, a job pool in general, right? But I mean, you can buy good deals, good price points, right? And that's really ultimately where you can find true value add deals, right? And I mean by that is like direct to seller type of situations, right? Where same person's owned it for 20, 30 years. Usually in a primary market, those markets are so hot that people tend to cycle deals. But in tertiary markets, I've seen it just kind of where you can find those types of opportunities. So, I mean, ultimately, a deal can be had anywhere, right? Even if you're buying in, name your city, right? Even Detroit. I mean, you can still find opportunities there. It's ultimately about the right price points and the right level of risk. All right, let's see. So next question, I'm going to ask this one to Garrison. If you've got 100,000 to invest and can probably get another 500,000 from others, what size of a deal would you go after? Unit size and dollar amounts.
75 units minimum, probably 100 units minimum. I'm going to look somewhere in the Southeast corridor, Florida, Georgia. Hot markets, good markets. Feras is in a lot of those markets, actually. But I'm going to look for something like that. And really, if I have that kind of money, I'm probably not going to use that money for a deal because I'm going to go raise capital from other people, OPM. That's what I would do.
Yeah, so I think in this situation, he's saying he can raise 500,000 from others. So,
oh, okay,
600,000 total, right?
And
so,
100 is his, right?
Yeah, the 100 is his.
The 100 that's yours, I would let that sit in your back pocket, save that for a rainy day. The other 500, I would go look for a deal, and I would take that 500 and probably raise another couple million on top of it.
If you can, yeah. If you can't, then that's going to get you into about a $2 million deal, right?
Yeah.
If you want to know price point, then unit size is irrelevant, right? It's ultimately, leverage, you're not going to be able to get above 2 million.
Yeah, so if you don't go raise capital from other people, a $2 million deal, $100,000 a door, you're looking at 20 apartments or so. But I want to be at that 100 unit mark or something like that. So I'm going to have to raise more capital. So that means I'm going to have to align myself with other people. And that's what Multifamily Masters and this networking in the breakout rooms and surrounding yourself with good people and networking in this business is all about.
Totally agree.
I would say, just something I do really quick at back of the napkin, and I think it helped me when I started was like, when you know what amount you have. So if you know like 500,000 is probably your amount there, Justpreet, then I divide that by I divide that number by 0.4. Okay. And that's because I generally see like, hey, you're going to need to put down 20% towards at least 20% towards the down payment. And then you need to have some money for the construction or any kind of CapEx really. So I generally use a 0.4 is what I use. And just to say like, that'll give me an idea of what my top end max would be for buying a property. And for that one, it would be like 1.25 million and to have enough for both the CapEx and the down payment. So that's what I would shoot for. Something like a property that's like that.
I thought 0.4 is too conservative because you should be able to get some of that baked into the loan if it's a decent deal. So, but yeah, you know, it really varies, but that's a good way to look at it, right? But Garrison brought up a good point that I kind of want to reiterate, right? I mean, let's just say it is a $1.5 million property, right? And you know, let's say right now on the low end, right, you can get deals for 50,000 a unit. That's a 30 unit property, right? Back to Garrison's point, how about you find two other friends that can do the same thing, right? You guys get a 90 unit property. Problem with a 30 unit property, as Bethany can attest to, right? It doesn't scale as well. So it's kind of that weird mix between not having full-time dedicated staff and needing to rely on kind of staff augmentation from property management companies, right? And so, you know, I highly recommend getting a little bit bigger, right? We have a 90 unit deal, one person in, one person out. It works well. That deal's a killer, right? You know, maybe you can get away with 85, 80, but anything smaller, your staff is going to eat all your costs, right? And so it doesn't make sense to really have full-time staff or smaller, but then at the same time, you know, you're not having kind of economies of scale. All right, let's keep going then. So here's a really important question. How can I get invited to one of Garrison's parties?
Is that seriously?
That's seriously a question, Mark.
Yeah, man.
Mark Tessakiris asked
Hey,
that.
Mark, you know what? Shoot me a private message. I'm having a huge party next weekend, a bartender, big DJ. I invited Powell, Feras, and Bethany. They all said no. I invited Wassam. He said no. There's a couple dudes on this call that are coming, a couple girls on this call that are coming. Anton Matley's coming. He doesn't know it yet, but he's coming.
Hey, that's amazing. That's the only reason why I'm here. I just wanted to be invited to one of those amazing parties.
Seriously?
This is the only way to get the invite. I mean, anyone that's been there has been to one of these MFM lives, or there are nobody. So we'll call it a day.
In all seriousness, man, if you want to party this weekend, shoot me a private message. My cell phone is 41. Just kidding. I'm not going to give that out on here. But shoot me a private message, my man.
Well, no, I've been, I've been trying to get in touch with you, and I figured probably better to get into one of these Zoom meetings. But yeah, I'm just beginning. I'm just trying to get the courage to get out there and invest in something. I've had some opportunities in the past, and they've seemed a little bit shady. It was an opportunity to invest in somebody else that is kind of reverse, I guess, hard money loaning. So he's going around getting money from people, and then he's paying you a percentage on the investment that you're making.
Yeah.
I just didn't know him well, but I have some friends that want to put together some money, and we just I'm the only one that is being proactive and trying to take the first steps, I guess.
Where's your home market at?
Well, I live in Baltimore, Maryland, so.
Oh, you better definitely come over this
Us guys
weekend.
next door, man. Easy invite to your party.
So I have
There, man.
done a few flips. I invested in a that's how I started, and then I invested in just a townhome as a rental, and ended up just getting rid of that after a few years. Taking a little break and trying to get into one of these multifamily deals. I think it would be great, but I just want to learn a little more. That's all.
Come hang out this weekend. Seriously, shoot me a private message. I'll look for it tonight.
Yeah, that'll be awesome.
Yep. I'm having a great Gatsby party. You got to dress up. You got to look a little fancy, though.
Oh, Halloween or just like a black tie? I don't know.
Halloween, man.
All right, we expect to see you guys post a picture of you guys in outfits. All right.
Absolutely.
I have
All right.
Hey, hold on. I have a question for Powell.
So-
Why the hell are you rocking a White Claw t-shirt, man?
Man, we were talking before, and I get these t-shirts for free. So I'm just like, hey, man, it's a t-shirt for free. That's what I get. So that's why I rolled the White Claw. I don't even drink. So, I mean, I drink a little bit. So, but
He'll rep anybody that'll give him a t-shirt. All right.
yeah, you got me a t-shirt. I'll wear your t-shirt, man.
It's
Nice
easy
and
to buy.
comfortable.
It's easy to buy Powell's loyalty. I see.
Yeah.
This is where like Anton, will get him 10 shirts.
There you go.
All right, let's keep going. So this next question is for Powell. Tell us about self-storage deal. Why did you transition to it from multifamily? What did underwriting process look like? All right, Paul, you want to answer
Sure.
that? Let's try to keep it brief because there's like 20 other questions now.
Yeah, sure. I'll keep it brief and everything. And if you want more information, just feel free to reach out to me. You can reach out to me directly and everything. But basically, I knew I wasn't going to buy any multifamily. Me personally, I was like, I'm not going to buy any multifamily once COVID hit for at least 6 months. So I knew that. Well, I was like, okay, what am I going to do during 6 months? So I learned basically my secondary asset class. It always been self-storage. So I learned and poured a lot more time into it. Got some coaching. Did the whole thing about learning how to underwrite it and everything, and then went out and sourced deals and basically found one. Right. So that's the reason why I just knew I wasn't going to buy any multifamily during this time. Now, for let's see, I guess the other question was how do I underwrite it? I would tell you one of the major things that's different with self-storage and multifamily is that self-storage looks at square footage, rentable square footage per person in a geographic area. So like a 3 mile or a 5 mile radius, right? That's really one of the most important things to know. So what that means is like how much competition do you have, right? And so you need to know that because you can find an off-market deal or something nobody knows about, but truthfully, if there's a ton of competition there, it may not be as good of a deal as you think. Whereas in multifamily, you got that inside track on a direct to seller thing. That could be great, and nobody else knows about it, and that you're gonna close on it. It could be a great deal. But in self-storage, it's not really the same, really. So knowing that rentable square foot per person in that area, that specific geographic area, 5 mile, 3 mile radius, is super important. So.
Hey, pal, Feras, question for you two, real quick. Do you want to do a breakout session right now and then come back and continue with the Q&A, mix it up a little bit, or you want to keep on going with this? We have 105 people on here right now. This is a good night.
That's a good question.
Yeah.
No, here, let's do 3 more questions and we'll do a 10-minute breakout and then we'll bring people back. How about that?
All right, we'll do a 6-minute breakout in 3 minutes. How's that? I'll negotiate with you.
All right. Let's see. So I didn't quite understand this question. In Cal, what is the impact of the gig/independent on the real estate field? I guess it means in Cal.
There's a debate going on between converting gig employees that are doing driving for Lyft, Uber Eats, and all these companies out there that are doing gig work that are getting converted into employees. And there's a fight now from Lyft and Uber and all these guys saying, no, let's put a new prop in there that says our drivers and our employees or our gig
Correct.
workers are exempted. So I don't know. At least that's the debate that's going on in California around the gig employee.
Yeah, then I guess I don't understand the question though. In Cal, I think it says Cal, but I think it means California. What is the impact? Yeah, I mean, it's no different than any job growth, right? I mean, if they're making more money, they have more money to spend, right? And vice versa. Let's keep going. All right, here's probably a good question to ask from Bethany that we can kind of wrap up with, which is for each of you, what does underwriting process look like for you? Do you do some complicated formula right away for each deal or you find, or is there a simple back of the napkin equation you use? For each of you, what's on your Christmas list? All right. Who wants to go first, or I'll go first?
Go for it.
All right. So for us, I do an initial sniff test, right? And really my very simple sniff test, it's very similar to what you guys do in the residential space, right? Where if you came from residential, there's the 1% rule. So for me, if I'm buying an apartment complex and let's say the broker tells, I run the math, the broker wants $90,000 a door for it, right? That deal is not renting on average, or I can get it to above 900, right? 1% of 90,000. Then, it's probably not going to cash flow, right? And that's a very high level rule of thumb. But a perfect example came in today and over the weekend from a deal that a broker is pushing my way, and they want $115,000 a door for it. But the average rent in place is like 900. Right, that's a big spread. I know that deal, unless I can miraculously get the rents closer to 1,200, I don't think it's going to work. Right, that's my very preliminary background, back of the napkin. Now, once I kind of do that, then I quickly go through and run it through our pipeline for any deal that makes sense. We have a pretty robust pipeline. We keep track of every single deal.
Hey, real quick, Feras, I hit that button a little bit quick for the breakout rooms. We're coming right back. We're going to continue with the Q&A. This is only 3-4 minutes, and we'll be right back.
All right, filtering back in here, huh?
Let's see how many people we lost after the breakout rooms. I just kind of want to mix it up a little bit this time and do a breakout room halfway through, just because we're all about meetups and meeting people and networking.
All
Yeah.
right.
Yeah, it was good. I met a couple people that I didn't get a chance to meet before. So
You scared 9 people away, Garrison. We were at like 99 people.
I think we're at 102 is when I hit the click.
Maybe you
button.
did, yeah.
I'm cool with that. Whatever.
All good.
Awesome. What'd you guys think of the networking portion? Meet anyone interesting?
yeah,
Yep.
it's good.
Good people.
They're always great. Love them.
Awesome.
Yeah, and we'll do again at the end as well, right? We wanted to break it up a little bit with our structure, so we'll do it again at the end and get a chance to meet some other people. With, that's great part of it is you got to get a chance to network with people you don't know, pass your information back and forth, find out who's investing in your area, things like that. So.
Yeah, so from here on out, we'll do another Q&A session, and then we'll do another small breakout session, and I'll let this channel open for everybody and anybody who wants to hang out and just talk and get to know one another. And just since we're halfway through, if you're watching this on Facebook Live and you want to be part of this thing and the networking portion of it, make sure you hit the link in the comments below. Hit the Zoom link, register. We do this every 2 weeks. We are multifamilymasters.com. If you're not a member of our Facebook page, hit the little search bar up top, type in multifamilymasters.com and join that Facebook group. I saw today we just hit 5,800 members. Our immediate goal is 10,000. Our long-term goal is 50,000. Multifamily Masters Mastermind. If you're interested in learning, sharing, networking, growing this business, there's a lot of people on this call who I saw that are on our mastermind. We're all about holding you accountable. We're all about teaching you the ins and outs of this business simply because we want to partner with you. And we want to partner with people who know what they're doing. So if you think you're going to be good at finding deals or analyzing deals or doing whatever you can do to add value to us, we want to partner with you. Reach out to Feras, Power, myself, Bethany, et cetera, et cetera, et cetera. Let's rock and roll. Go ahead, Feras. Go ahead, Powell.
So then I guess so the other part of Bethany's question that we didn't answer is what's on your Christmas list? For me, getting another deal under contract, we've been looking at a lot of deals, making a lot of offers. Just right now, the market's kind of weird. We're looking at a lot nicer deals, right? The price points between C and D's have really compressed, and I'd rather pay up another $15,000 for a much nicer asset, maybe a little bit less return, but much better long-term outlook. So that's on my Christmas list.
I like
Can't
that.
be real estate related.
He wants that. I want a BB gun.
You want a BB gun?
Yep, I just want a BB gun.
I'll get you a BB
Don't
gun.
put your eye out.
Is that Jeff Greenberg? I think I hear Jeff Greenberg.
That's why Garrison has glasses.
That wasn't me.
Okay, Jeff.
Oh,
Hey,
mate.
Jeff, I invited you into the Multifamily Masters Mastermind group, and you still haven't accepted it.
Oh yeah?
What's up?
I'll have to take a look and see. I don't know that I've seen that.
He'll put you on his calendar. Don't worry. You're on his calendar.
Put me on my calendar.
Pal, what's on your Christmas list, my man? Christmas gift. What can I get you?
You know what? I just saw this thing, and it's kind of a weird thing, but it's there's this back brace that I was like, I want to get like this back brace, and it's like it has this belt on it. It was like $60, and I was like, I kind of want to get this back brace. So it has this magnetic thing that's supposed to help your posture and your blood flow and everything. So I was like, kind of looks kind of cool. Also, I was like, when I closed my deal, I was like, I'm gonna get that thing. This
is where Bethany's taking notes. So you know what to get us for Christmas. So. Ours is a lot easier than mine, Bethany. So let's see.
Yeah. I was like,
all right.
Bethany Smith, what do you want? You're part of our team. What do you want for Christmas?
Stabilized binoculars so I can whale watch and stuff, but they're stabilized.
What kind of price point are we looking at, may I ask?
Like $150, $200.
Done. Send me the link.
Nice. That was easy.
If anyone wants Christmas gifts, send them to Garrison on Amazon. He'll take it. He'll get them for you guys. So
I'm doing JV agreements for anyone who wants to buy Christmas gifts with me.
All right. Let's see. Let's keep going then. So, all right. Let's see. Next question. How are you all able to discover your best off-market deals? All right. I'm going to answer this one because I want to say something. I think off-market is totally an overused term. And hey, Mark, I think you're getting some feedback.
I invited this guy to my Halloween party, and here he goes.
I know. All right, let me keep going. So basically, everyone talks about off-market deals like it's the best thing since sliced bread. To me, that's really nonsense. Almost every deal that is and I'm just talking about bigger deals, right? So let me caveat that, 80 units and above. anything 80 units and above is going to go through a broker, right? Right now, it's a hot market. As a seller, it'd be irresponsible for me not to use a broker, right? Because they are going to get you top dollar and their fee is minuscule towards what they can get you. They know who's buying and who's not, right? Now, that said, there is such a thing as essentially, or you're getting the first look from the broker, right? So it's not being blasted to the full market, right? But the brokers may be going to a handful of people and showing them a deal. Now, we've sold a deal that way. We have another deal right now that we're selling that way, right? Where we told the broker, hey, here's our price point, get your best guy, and let's see if we can get a deal done, right? Where they're going to go through and give you that referral. So you want to be on the broker's short list is what they call it, right? That said, to give an example of a deal that we did do something like that on, we had a deal in Atlanta that we were buying, and we were doing due diligence on site. Before we left, we asked the broker, what else do you have coming up, right? And he said, well, I have another deal that we got the exclusive on that we're going to market in 4 weeks, right? They were still doing all the stuff. But he gave us, he mentioned it, right? He told us about it. We went, if I remember, before we flew back to Houston, on our way back to the airport, we stopped by the property, toured it, drove it. And on that airplane flight back, we underwrote the deal and we were like, this is a good deal, right? And basically we were the only ones to see that deal. And that's a beautiful deal. I mean, we still own it today. I love that deal. Right. So it's basically, it's all going through the broker. It's talking to them at the right time, right place. And I mean, literally, even brokers that I know really well, if I call them on the right day, the right time, they're going to remember, oh, this deal just blew up. Hey, it's a good fit for Feras. Right. So it's the situations like that you try to create.
Okay. Thanks, Feras.
No problem. Let's keep going then. We have a deal under contract, 295 doors, Southern Illinois. The deal is going sideways because of the appraisal. The as-is value is good. The appraiser screwed the stabilized value. What he did was average the current in-place rents and put the occupancy at 90%. He also put the stabilized cap at 10.5. Wow. What can we do to challenge this? The most recent leases are 125 above the average rent he used. Honestly, a couple things. I mean, this is where talk to the lender and say this appraiser's logic doesn't make sense, because you're right. I mean, if the recent leases are higher and that cap sounds way too high, you could definitely challenge it. And this is where having a good mortgage broker helps as well, right? That's part of their role, to work closely with the appraiser and figure out where it's going to land before it officially lands that way. So that way you can kind of influence them, right? And so really think through that and figure out your team. But I mean, my feedback to you is, either find another lender with a different appraiser or talk to the lender that you have and talk through it with that appraiser, because that doesn't sound right. Let's see. Another question. I spoke to a lender for a multifamily today. In addition to the down payment, which could be 30%, often lenders want liquid cash of up to 20% of purchase price. This means we need over 50% of the property value in cash. This is in addition to reserves put per unit. That seems like a lot of cash needed. We were looking for a $1.5 to $2 million property, but didn't expect to need almost $1 million of cash to do this. Does this sound right? How much cash should we expect all in for a purchase of a commercial real estate? Do you guys want to answer that one or want me to?
Is Anton still on here? Let Anton answer that.
I'm on.
Yeah. All right, Anton, you want to answer that one?
Sure. Obviously, it all depends on the property, right? Every property is a little bit different, but for that size of a deal, it's only unusual that the post-closing liquidity requirement is at 20%. Usually, it's around 10%. So the question is, why did they require this? Is it such a hairy deal, or the sponsor's relatively weak from a balance sheet perspective? But as a general rule, you should expect 10% of liquidity post-closing after your down payment and all your closing cost.
Yeah, so Anton's point is post-closing. And again, you can have other guys that sign on the deal with you, right? They can bring that to the table. So just keep that in mind. That's how we
real quick, I'll throw a plug out there for Anton. Anyone who is looking for a multifamily lender, if you're doing a decent sized deal, $1-2 million or more, definitely reach out to Anton. He's who I would use for all of my financing. Great guy, wealth of knowledge, 110%.
Appreciate it, Garrison.
Anton, feel free to put your website, your contact information, anything you need in the chat below. Hopefully these guys don't blow up your phone or blow you up just with generic questions. But if you have a serious deal and you're looking for some serious financing, this dude is a wealth of information.
And not to stereotype, but he does fit the stereotype of being a Swiss banker. So we'll leave it at that. All right. Let's see. Next question. As there are more syndicators and LPs becoming more sophisticated, do you expect fees and GP back end percentages to compress? Is there an advantage for a GP to lower fees ahead of others? I'll answer that one really quickly. Do I expect it to compress? Probably not, because at the end of the day, being a GP, there's a lot of work needed, a lot of partners. There just needs to be enough there. Otherwise, people won't do it, right? But that said, a good GP, and I'll be the first to say this, if a deal is not going to work out, I'd be the first one to give up my equity position to make sure investors are whole, right? If you're a good GP, you're in it for the long run. It's all about making sure your investors are whole and, more importantly, make money, right? And so, if that requires giving up, a piece of your pie, by all means, right? You should be in it for the long haul, right? I like to tell people, I'm not in it to do 1 or 2 deals. I'm in it to do 100 deals. How do I maintain that track record, that trust? And so, but I guess it's all GP specific. So not every GP has that philosophy, I'm guessing. So let's keep going. And I kind of answered the off-market question. Question is, I guess to me, Feras, do you guys do 506B, 506C, or both? The answer is we've done both, right? For those that don't know, 506B means that you can take accredited and sophisticated investors, right? And they can self-accredit it. That's an important point, and I'll say why. Because the 506C offerings means that I can only take accredited investors, and they have to do third-party accreditation. So meaning an investor can't tell me he is accredited. He has to actually prove it to a third party that then tells me to. And the problem with that is, from our experiences, now I have guys that are worth $20, $30 million of cash sitting in the bank account, and they can't just show me that to prove that they're accredited, right? They have to go through the hassle of getting a third-party accreditation. So it adds a little bit more friction to investors. We've done both. What's nice about a 506C is you're allowed to market it, right? If I had a 506B offering right now, I can't share that with you all right here, right now. I have to have a pre-existing relationship. But in the 506C, I can blast it. I can get ads. I can get a billboard on the highway. So those are the differences. It's important for you guys to all understand that. Let's see. Next question. I thought you needed to invest your money in the deal to have skin in the game. That's from David Hutchins. Who wants to answer that one?
Sometimes yes, most of the time no.
Yeah, and as an LP, it's good to ask the GP, are they investing what they're investing, right? I do like the idea of having my GPs, and if I'm an investor, right, I think it's important for GPs to have skin in the game, right? And this is where the deal structure also makes a big difference, right? Are the investors making money before the GP or not, right? Understand that.
And there's ways to look at and hide where your money's coming from. A lot of times GPs will only put in part of their acquisition fee. So really it's not any of their real money, but it looks like it's their real money. So that kind of might throw you for a loop a little bit.
Let's keep going then. Seller financing questions. Can you speak on the process up to closing? Besides buyers and sellers, who else is typically involved in the process? Example, attorney, title company, understanding. It depends on a number of factors as the best response. What are the typical terms you've seen or heard sellers agree to? All right, there's a lot of questions there. First question is, who is typically on your team? Garrison, whenever you're buying, what are the different roles and people on your team?
My team, I have a guy named Jeff who is an absolute killer at analyzing deals. If he says no to it, I'm out. If he says yes to it, I trust him wholeheartedly. We have another guy named Brent who is specifically looking for deals and contacting brokers every day. This dude is a machine on the phone. He loves to talk to brokers, and he's done really well at it. And then we have another 2 or 3 guys on our team that are just strictly making the deal happen. We're constantly
Let me rephrase the question, actually. What professionals? Not that those guys aren't professional, but I mean outside of the GP team, right? Maybe is the question I'm asking.
Yeah, go ahead. You can answer it, man.
So basically, let's talk through it, right? So usually, if you have a mortgage broker like Anton, you mentioned, right? You have an attorney, right? And you have 2 different types of attorneys, right? This is important for people to know. You typically have a syndication attorney who's making sure you're doing all the SEC paperwork compliant correctly, et cetera. And then you have a contracts attorney who's helping with the contract, right? You have the PSA, you have lender documents, et cetera. A lot of times the same attorney can do both, but just understand there's 2 different roles. In addition to that, you have an insurance broker, right, who's helping make sure you get the insurance. You have your lender, right? A mortgage broker is helping tell you who is the best lender options and what that looks like and helping shepherd it. The lender is the person that's actually providing the money, right? That's an important part. And the lender has a bunch of their people too. They have their attorneys, They have the appraiser, like we talked about earlier. Lenders handling all that, right? The third-party reports, et cetera. In addition to that, you have your investors, you have your partners. I think those are all the key roles. I'm trying to think if I'm missing anyone, but that's basically the gist of it. Let's see. Here's a question. I paid the earnest money to help a partner get a deal under contract. I was added in the operating agreement for the asset management team, but now I'm in a dispute with the manager. They wrote me out of the deal, but it's still my money in the escrow account of the title company. The partner keeps saying they will repay, but they haven't. How can I protect myself? I have the wire receipts that show I wired the money into escrow. Can I do something so the title company can't release the escrow money until I release it? I'm just going to have to say you're just going to have to ask an attorney, honestly. That's kind of a tricky one, probably a pending lawsuit of some sort, right? And I'm not sure if I don't know if title company cares where the money came from. It's ultimately who has the permission to allow the release or not. So, sorry. Here's a question: JV versus syndication. Could any of you talk about the structure you use starting out? Powell, you want to answer that one?
Sure. Yeah, sure. I'll kind of go through it a little bit. Like when I started out, really the first one was by myself. So I just did one by myself because I really wanted to make sure that I knew what I was doing. And if I was anybody's money that was at risk, then it was mine, not anybody else's, right? But the second deal, once I did that, pretty quickly, I just started telling people what I was doing the whole time. And then I did a JV after that with about 5 friends, family. So 5, 6 of us in that deal. And that's kind of like the way that I started out going. Then I went to syndication. So I went and became a general partner on several different syndications. Now I've kind of went back to, now I'm going to be doing more JVs. So my plan is to do more JVs, and I'll tell you the reason why is because really you got to understand what your investor network is like, right? Is your investor network made up of a lot of passive investors, and then you could do a lot of syndications because that's what you're probably going to do, or is it made up of a different type of investor? And so my network is made up of a different type of person. It's a person that's probably has some capital that they want to invest, but they're also deeply interested in gaining experience and being involved in the deals. And that's a little bit more people that want to be on the JV side. So that's just my network, and that's who people that I know. So I'm really kind of catering towards what my network is in terms of what the structure I'm going to be using.
All righty. Let's keep going. Next question: after your 3 to 5 year exit, who usually ends up being the end buyers, hedge funds, REITs, etc.? No. Honestly, so this is a good question because everyone always asks if the opportunity is the opportunity, why don't you hold it? Or, why would the next guy buy it, right? And usually the assets that we're talking about, which is CB assets, right? Yes, there are some REITs that do those kinds of assets, but usually institutional equity is looking for nicer, bigger deals, right? Now, that said, the opportunity is usually a good operator is not going to fully update everything about a property, right? You got to leave enough meat on the bone for the next guy. What we want to do is prove the value to it, right? Because really with any deal, right? Think about an apartment. Think about a house. How long can you live in a house that you live in before you decide you need to repaint or you need to replace the flooring, right? Things happen over time, right? That necessitate a CapEx or capital injection, right? And so if you think about a deal, right? The life cycle is usually you're putting money into the deal, you're improving the property, right? You're now getting better rents, you're cash flowing, et cetera. But over time, right, that asset is getting worse condition. Yes, you can redirect some of the cash flow into CapEx, right? But it's really economically, it doesn't make as much sense as at that point in time, you usually make an exit and the next guy can bring that capital injection back into the deal, right? Do the other half, et cetera. So like we have a deal we're selling land right now. We upgraded like 55, 60% of the units. The next buyer can see clearly what we did. If they do the same thing, they can go party, right? They need to bring money into the deal and approve it. And it makes sense for them. It makes sense for us. Everybody's happy. Let's keep going. People are saying network time was too short. Breakout was awesome. Look forward to connecting with you. Okay. All right. Bethany says it can't be real estate related. Sorry, Bethany, for my question earlier. Omar asks, where are the true good deals? Suddenly I've seen many deals coming in my inbox, but they are still expensive. Do you think we will really see an impact for multifamily market price later on due to the COVID and current situation? Where are the good deals? That's a great question. I wish we all knew. I mean, I totally agree. I think right now things are really expensive. We haven't bought a deal in a year, right? And we've made more offers than probably anybody I know, and we've been close to probably anybody. And, you know, ultimately we have our line, and, you know, I got to make sure I buy the right deal. There are people that are buying deals. Maybe they're good deals. Maybe they're overpaying, right? It's hard to say, right? It's very market specific. Impact on multifamily market price. I think there will be a subset of deals that are non-performing, right? Because if you think about it, if you have a deal that's already non-performing and then you take another 10% haircut due to COVID delinquency, you're really not performing, right? And, you know, you may get to the point where you're not able to service the note, property's bleeding, you need to make an exit. There will be some of those deals, maybe not as much as we all thought initially. And that's probably still a few months out, because even from like a legal paperwork, right? You got to go through the phases of remorse, right? And there's multiple steps and phases or grief. Sorry, there's multiple steps along the way before it kind of gets to the end. So that's that. David Hudgens wants a Ferrari, Bethany. I think Garrison, you know, put on your card for that one. Yeah, Bethany said she's not buying. Send it to Garrison. All right. Let's see. Any more questions? Sorry, I'm flipping through questions to find them. How many deals do you underwrite for each you buy? How many do you see in person for each you buy? Powell, you want to answer that one?
I would say, well, I mean, with multifamily, it was probably like, you know, if you're talking about all the deals you see, you know, I mean, like 100 at least. I mean, and I didn't get any, right? And so I was like 100 at least before you buy one, right? And then I don't know, with self-storage, if you're asking me specifically self-storage, it was probably about 100, but it's been a little bit more. I would say there's more traction that I found in self-storage.
All right. I'd say, yeah, it's very hard. I mean, there's a lot of deals to underwrite. I mean, I'm talking about, yeah, for every 50 deals you underwrite, you maybe make 10 offers, that maybe gets you one best in final. And I only really tour once I get into best in final. So that's my thoughts. Let's see. Do we have anybody who would be interested to get on a deal as a KP? 8 million, 13 million. Sorry, guys. This is my daughter. For those of you that have never seen her, you can say hi.
Hello.
For anyone that is interested, you can say hi to Tim. Let's see, what's the largest deal you guys have done and how much? 20 million. You know, we've looked at 30, 40, $50 million deals and have not been able to get one. Okay. Sorry. Me too. I mean, Powell and Garrison, do you guys want to answer that?
I mean, yeah, the largest one was, I mean, dollar amount, the largest was 17 million. You know, part of a syndication, right? So it's not like I own a $17 million property, right? So, you know, I'm one part of the team here. So 17 million, and that was 208 unit, but largest actual unit size would be 236, and that was in Phoenix. So close to that same dollar amount though.
All right. Next question is from Anton. When could we see the new, it's for Anton, when can we see the new real estate law changes come through if there is a change in presidency?
I need to answer that.
Yeah, directed at you.
Well, I wish I knew how the laws are going to change. So is the question more specific to a particular clause in the law?
Maybe, I think maybe let's rephrase it. How quickly do you think the laws could change if there's a new president?
I think there's a direct correlation between the presidency change and, say, 1031 exchanges, right? And that's a big real estate related tax law. At least I know that's probably going to come to change.
Yeah. So I think it will still take quite some time to get all that through, right? Obviously, if President Biden is in the office next year, he definitely will push for go after the 1031s. At least that's what initially is the case, as well as the capital gains taxes. So I would expect that's definitely on the capital gains tax, I expect it to deteriorate from where we are today. I would also not be surprised if some of the bonus depreciation that we have been enjoying, that falls away. But how quickly is that coming through? Who knows, right? That's anyone's guess, but I would definitely say just that is the 1031 and the capital gains and the bonus depreciation. These three, I fear, are the ones that are most at risk.
They're on the chopping block. All right, let's keep going then. Thank you, Anton. For those of you still working W2 job, how much time are you able to contribute to multifamily investing? And hello, Ferris's daughter. She says thank you. I think maybe the answer to that question is it ultimately depends on the job, right? There's different types of jobs, and for me, I mean, that's working nights and days and putting in the time and effort, right? I think it really varies on the job, though, right? Some people have jobs that are behind a computer, some people don't, and so my answer to you is put in as much as you can. In order to really move the needle in this business, though, if you're not putting in 15, 20 hours a week, right, you're probably not putting in enough time to really make kind of actionable progress.
Yeah, I mean, I would say that early on, I learned that you got to get up early. At least for me, I had to get up early, right? And so I'm not a morning person, but I've turned into a morning person. Now I love the morning, but I used to be a night person and try to do everything at night. But honestly, changed that whole pattern about 4 years ago, and now you got to get up early, do your routine, and start cranking things out before people really wake up and start sending you too many emails and stuff like that. So get really productive in the morning.
There are a lot of wasted hours in the day. There are 24 hours. Utilize your time, utilize that commute to and from work. Do what you have to do to surround yourself with people in this business. Plus, just get the knowledge, listen to the podcasts, scroll the Facebook groups, do the Q&As, all of that kind of stuff. Just get your mind mentally prepared to really take this business to the next level.
And I think one other thing people forget to talk about is your balance in life, right? If you lose sight of your why, though, and you dedicate all given hours that you possibly can to real estate or your business or job, and you lose sight of your family or whatever your why is, some people get lost in that and they have a hard time bringing that balance back in.
For sure. That's awesome, Jesper. Yeah, for sure.
All right. Let's keep going then. I own 21 unit in single family homes. How do you get over the hump to go after bigger deals? Who wants to answer that one? Powell,
I can take that one.
All right.
I can take that one because I was in a similar boat, right? I had my first property. Really, truthfully, I think when you want to go bigger, you need to partner with people, right? I mean, that's one thing. It's really hard to take down if you had to take down 100 unit by yourself, that's tough. I mean, you got a lot to do. So it's great to find somebody that has the experience, that maybe they've taken down one or two of those bigger units that you want to, and then you've already provided, you have some experience so that you can bring some experience to the table too. But learn from them what they've done and why they're going after a certain property and what they do to make it successful, and look for more partners that align with you. So to me, honestly, to get over that hump, you need to partner with people, or you need to somehow come up with a lot of money to find one how to do it on your own, because that's going to be tough. Like if you want to get a 100 unit one on your own, a lot of stuff involved in that. So that'd be my suggestion.
If I could echo that, I've done deals with two partners. I've done deals by myself, syndicated deals by myself, and I've done it with 5 or 6 people. And I'll tell you, I'd never do one by myself. I mean, you got too many balls in the air, too many things relying on you. Definitely, if you want to step up your game, find someone experienced to help out and find a way to help them out and become a partner with them, do a couple deals with them, and then you'll start being ready to lead your own deals.
To Powell and Jeff's credit, I agree 100%. This is a very interesting business. In general, everybody has a good attitude. Everybody has a good mindset. Everybody wants to help you. 3 years ago, I knew nobody that had 30 or 50 apartments. Now I have a huge Rolodex with people that own thousands of apartments that I can partner with. As a matter of fact, I think Feras is coming with us. We're going to Jamaica in a couple of weeks with people that own hundreds and thousands of apartments, because it's all about surrounding yourself with those people, because you want to form those bonds, form those relationships, so you can partner up to scale your business.
All righty, totally agree. It's definitely a team sport. Let's keep going. What book, lecture, website, etc., provided the biggest learning curve for you all as multifamily investing? That's a hard question to answer. Maybe if you don't know anything about real estate, there's a book called The Millionaire Real Estate Investor. I like that book. It does a good job teaching people the basics of real estate, regardless if it's multifamily or not. From there, also for me, I listen to a lot of podcasts, and I'm a numbers guy. And I just kind of hopped in, started playing with it, started just getting familiar with it all, right? Maybe that's my answer. I don't know how, Garrison.
I would agree with Feras. Is like when you're trying to do as much as you can that is free. I mean, the podcasts to me were the best way to go. Like there's so many podcasts that you can consume really fast, right? I put it on 2 times speed, right? And then you just pour through them as fast as you can, and then listen and learn. And I mean, I think that's the way to go. And there's certainly a ton of books. There's, we try to provide value here at Multifamily Masters as well, with free content and everything. But I think that's the way to go. It's like you have a ton of different things in podcasts.
All right. Well, let's do another 2 questions, and then we'll do a breakout and call to wraps. I know we're already past the hour, actually. Let's see. What do you guys think of San Diego, where the multifamily market cap rate is low? What's the best way in doing deals? Garrett, Powell, I'll let you answer that one. San Diego's just one volleyball flag away from you, right? So
Sure. I mean, it's hard to. I haven't looked specifically in San Diego, right? But I mean, I live in LA, and it's when you look, the cap rates here are just, you're not buying really cash flow. You're not really buying cash flow. You're kind of buying on appreciation. So if that's what you want to do, it's probably going to be very similar in San Diego. Is that they don't cash flow as well as properties in other places, right? So I would say, truthfully, also you run the risk of a lot of California laws. They're very heavy towards the tenant, and they're moving that way even more. So even if you do buy something and you do find something, you're going to be under some strict laws that you're not going to be under if you buy a place in Arizona or Texas or Florida and things like that. So that's what I think of San Diego. I mean, that's not just specifically San Diego, but it's kind of California in general, I would say.
All right. And let's do one last question. I guess there's only one question left. I was hoping to get a better one. Let's do it. What are your thoughts on the urban exodus, short term and long term? I guess I'll answer that one. Being in Houston, right, we obviously have the very big sprawly city, and we have kind of the urban core that's been redeveloping, right? I think the answer is for cities like Houston, where people like me grew up in the suburbs, right? That was where the better schools were, et cetera. Now you're having guys like me that have grown up in the suburbs all their life wanting to do urban flight back into city cores, right? But that said, people like me also move back out to the suburbs. You have kids, schooling, and et cetera. And so while it does give the opportunity to gentrify and kind of improve that urban core, right? I don't know if it's like necessarily a one or the other, right? I think it can be both, and that's okay. That's maybe my answer. Powell, Garrison, you guys have anything to add to that, or let's call it a wrap and we can do that last breakout?
Let's call it a wrap.
Yeah.
All right. Well, then let's call it a wrap. So thank you all for participating and joining. Hopefully people got value from that, right? Again, we try to do educational things. We want people to grow, people to learn, people to succeed. So hopefully that was valuable. If it was valuable, let us know. If you like Garrison's glasses, let us know. And, that said, we'll go ahead and do the last breakout, and, we'll call it a wrap. So maybe Garrison, that last breakout, you can just leave it open. People could stay on as long as they want, and we'll call it a wrap.
Yep, I'm going to let the breakout rooms open. We are multifamilymasters.com. Check out our Facebook group. Check out our website. Facebook group is called multifamilymasters.com. Multifamily Masters Mastermind. We want to hold you accountable. We want to partner with you. If you need someone looking over your shoulder to help you grow, let's rock and roll. Let's get paid. We do this every 2 weeks. Multifamily Masters Live with Bethany Smith.
Don't forget we're going to do bingo next week.
Yep. Multifamily Masters bingo, Halloween party, best costume. Let's win some swag. Win a mastermind.